Alrighty, folks, this is one of those episodes that I love to do. I love to take my experts in their domain, and we are going to make some guesses about what will end on the last trading day of the year. Call it December 31st. I don't actually know if that's a trading day or not, but you get the picture. Where are we going to end? We just completed Q1, first trading day of Q2, and now we're going to talk about where we end Q4. And to do this, a 10-year Wall Street veteran, Taylor from Life Goal Investments. How you doing, buddy?
I'm doing great. I just want to let everyone know there was zero time for preparation of this. Michael goes, let's do it. And I'm like, all right, let's do it. This will be fun.
Yeah, we don't prep for these. We just throw out a topic and we like it. So you're the guest. We'll let you go first. So the 10-year, just for full disclosure, as of right now, is trading down 8 basis points to 3.41. Where do you think the 10-year ends at the end of December 2023? Where do you think we're at?
Yeah, I think it could trade through 3%. So
a 2-handle.
Yeah. And
wow.
I think that that's not unlikely whatsoever. Listen, the 10-year trades based on forward look of growth and inflation. Yep. And I think both those two numbers, it's very hard to argue that they're not coming in. And I think that the market is overly optimistic. If you don't believe me, look at the stock market
exactly.
in the first quarter.
So again, so sub 3.
Yeah,
that is amazing. So again, you're clearly calling a recession, probably larger than the garden variety. We'll probably be in the middle of it at that point at the end of the year. Yep. That's kind of what you're thinking.
And I think that's probably at the year end is probably before you get any bounce on any asset versus, saying, okay, we're going to see the other side of this quickly. And that's not to be clear that because I don't want to, I don't mean by that this is going to be extremely long and pronounced. I mean that at that point, the end of the year, we aren't going to be through it enough to see the end of it where things will have bounced.
Understood. Totally get it. Wow. 3%. So you're taking the under.
Yep. I'll take the under on 3%. Oh, we got him scratching his head, guys.
I'll take the over on 3. Not much though.
Yep.
And again, to me, it's really, again, this is all just fun to play with, right? I think we could see 2s, but I think it'll be October, November. I think we're going to be a little closer to kind of coming out of it, hopefully by December. And that's really the reason I'm taking the over. Because I do agree with you. I think the 10 years going down from here.
Yep.
All right, let's just go over to gold. As of right now, as of this recording, gold is trading over 2,000. It's up $20 today. It's at $2,006. If you're going to call gold at the end of the year at, say, 2050, do you want the over or the under at the end of the year?
Repeat those numbers back to me one time. Sorry.
I'm trying to currently trading today at 2006. I'm going to put the over under December 31st at 2050.
Over.
So $2,050. You're over?
Over. Yep. Yeah, gold has traditionally done well in 2 environments, inflationary environments, which we might be going away from, but I like it as protection if we don't go away from that. And then a recessionary environment is the second environment. So gold is something that I think people should have involved in their portfolios right now.
I like it. So if you were going to put the mark over under that would make you scratch your head, where would you put it?
Yeah, I think you'd have to go up to probably like 2,200. So I'm not saying I'm not a gold bug for the record either.
No, you're not.
Gold is not an investment that I like to have. It doesn't yield anything.
Really good it's really good in certain durations. Yeah.
It doesn't yield anything and there's no tangible use for it, right? Jewelry. Gold's a soft metal. There's no other use for it.
All right, I'll take the over. On gold, I'll take the over with you as well. Now let's get to the fun stock market. We'll start with the Dow first. So the Dow as of today, obviously some energy focus in there's at 33,475.
Okay.
Where do you see the Dow, the Dow 30 stocks kind of end of year?
Yep. I see it probably, again, zero time for preparation here, but I'm going to say 8% lower than it is right now. Again, also know that Dow stocks are going to be more value leaning stocks. So the volatility of the volatility profile is going to be less than that of something like the Nasdaq or the S&P.
So that's about 3,100? No, 31,000? Yeah, that's about 31,000.
Yep. Yeah, that'd be about right. Yeah.
So you're taking the over under on 31,000 Dow.
Okay. So I set the line, then I got to decide.
Yeah, exactly. Why not?
I guess I'll take the under.
Yeah, I'll go over on that. I think the Dow, because of its 30 stocks and what makes it up, I think it is the better of the three that we're going to go through. I think it has
for
the
sure.
best
For
performance.
sure about that, in my opinion.
All right. So the S&P 500 currently sitting at 4106. We'll call it 4100. We're talking about the end of the year. I'll set the line on this one just so you don't have to.
Okay.
3,500.
Okay. I'm just running numbers here.
It's like
So that's
12%, I think.
Yeah, that's like 14%. 14% lower. So that's a bit lower. So and we're, what are we, positive 4%, 5% this year, something like that.
Something like that, yeah. Yep.
That's a really good line. So that's a really good line. I'll take the over on that marginally. Marginally over.
I'll go under.
Okay. That's
now the Nasdaq. This one.
Here we go.
Currently sitting, we'll just call it 12,100.
Okay.
We'll call the line 9,500.
That's 20% lower. Lower. Under.
Oh, the Nasdaq's going to bleed.
This thing has just ripped. The QQQs were up 20% in Q1.
I'm going to take the under as well. Yeah.
Oh yeah, sorry, you're under as well. Okay, so yeah, I look at that and say slowing economic backdrop. Large cap growth stocks right now are trading at 126% of their 20-year price to earnings multiple, 20-year average price to earnings multiple. So you're looking at slowing earnings, slowing economy, and an asset class that's trading at a 26% premium to its 20-year average, and that comes through a 20-year average that's been, granted it has 2008 involved in there, but everyone's loved tech over the last 15 years. Loved.
Yeah. So I guess you could say we're not particularly bullish on the year, huh?
Which is why you just bought Wealth, which has the bond and the gold exposure in it as well.
Exactly. Well, we've got two more since I've got you for a couple more minutes. How about oil? Oil currently is trading at $80.
Lower.
I'm going to call it, you're going to just say lower.
Lower. Yeah. I guess we have to set the over under for me to determine.
Let's just say $80 then. We'll just call it 80. You're going to take the under on 80?
I am. Yeah. Because again,
we're going to be in the throes of a nasty.
Yeah. Where if you're in a recession, oil doesn't do well. That's not to say, so like the other thing on this is like energy companies, oil companies rather, have gotten a lot better at squeezing profits even in tough times.
Well, their cash flow.
Yeah. So it's not to say that they're going to get absolutely crushed, but I think oil as a whole is going to come down. And now we've seen, just yesterday that OPEC can come in and squash that because they just say, hey, we're just going to take oil off the market. Yeah. And so that's a tough one because it's such a manipulated, asset. But I guess, without knowing what OPEC is going to do, I'll take the under.
Yeah. And just because we are not Bitcoin. You should not listen to us on Bitcoin. We don't do any research. It's not our thing. I'm sure I'm going to get lots of hates just for putting it out there. But Bitcoin today, again, round numbers, is trading at 28,000. You think Bitcoin is up or down come the end of the year?
Down. I think it's tough to make the argument that when Bitcoin has traded almost perfectly in line with the Nasdaq, just to a wider magnitude, that if we get an economic slowdown, which we both obviously project, and the Nasdaq we just projected to be down significantly between now and the end of the year,
yeah,
it's tough to say that in the light of that Bitcoin's going to go significantly higher. I could be wrong. This banking narrative that's playing out could get more pronounced. And
you know what? I'm going to take the over. And the one thing that I think helps Bitcoin, and again, part of this is time. I think in the next 9 months, there's going to be a lot of regulations that I think is going to punish lots of the crypto market, but may actually help Bitcoin specifically.
Interesting.
Right. So I think clarity brings
unregulated industry that everyone loves.
Yeah, that's what I think. That's again, I know nothing. I've read nothing. I'm just some guy guessing on YouTube.
No. And by the way, I'm not pushing back on your theory there. I do think you get regulation there, but I guess my point is like, it's almost funny that now we're saying, okay, it's going to get regulated when the whole thesis behind the thing was that it was an unregulated.
No, I totally get it. But I think what comes out of this is there's a couple of clear winners, and most of them go bye-bye.
Oh,
is-
yeah, so that's a really good point. You could see rolling of money from other, SHIT coins, as people call
Yep.
them, into
Exactly.
the big. Yeah, that's not a bad thesis. I guess I'll stick with my my
Yeah.
take on it, that directionally it's going lower based on the Nasdaq, et cetera. But it's a good kind of buoy underneath
It's
to
a
keep
floor,
the
right?
bottom from really
Yeah.
falling out. Yeah.
Yeah. Well, folks, I love this doing with you, Taylor. Thank you for jumping in with no prep. Where can people find and follow you? Because you tackle real things every day.
Thanks so much. This was fun. I like doing this. Off the cuff. Yeah. Follow us at Life Goal Investments, both on Instagram and on Facebook. I'm sorry. And on TikTok.
There you go. Thanks, brother.